Also with us is Joe Quinlan, the Chief Market Strategist at U.S. Trust Bank of America Private Wealth Management. And Joe, let's kick things off with you. It's a little quiet today. Maybe no surprise as we start to really kind of get into the thick of earnings here.
I think we're just still looking for the big guys to report. I think earnings are going to be good, more upside here. The trade numbers were something to chew on as well, but I think it's a calm before the storm.
What are the most key numbers to come out? I mean, Alcoa is interesting because it kicks everything off, kind of industrial, but tech seems to be a bigger holding, and then finance obviously is huge.
If finance, GE at the end of the week, that tells you about the global economy. So we're really just getting started. But I think it's going to be the guidance, it's going to be the sales. I mean, I think earnings are going to be good, but it's got to be better than cost cutting. Everyone knows that.
It's funny you talk about sales. We had Hans Olsen on earlier, and we talked about Alcoa's numbers. Obviously, some disappointment in the market over that revenue number, bit of a mix. But he says, what, 18% growth on revenues? He said nothing to sniff at. I mean, they're not bad.
Well, that's the expectations, though, too. I mean, so if you're going to push higher here, we've got to have some really good numbers and the guidance as well. That's going to be key.
What do you mean as far as guidance? I mean, we have people ratcheting down numbers for EPS for Alcoa, but top line, are people focusing more on that, paying more attention to the top line?
I think we need that, Matt, in the sense that for the second half, the second quarter, in the second half of this year, to drive the market higher, we're going to have our CEOs say, like, listen, the U.S. economy is back, the global economy is strong, we're productive, and it's going to be good on the upside.
And we're hiring people, and we're making room for more capacity. I mean, you had Alcoa still shutting down factories, right? You want to see the opposite of that.
Well, they're shutting them down perhaps in the U.S., but overseas they're expanding them. So it really depends. But more capacity that's productively used drives your earnings.
Let me ask you, so when you think when all is said and done, we're going to be pretty pleased with this earnings run? I mean, last numbers were off the charts, but that's because we were coming from some severely depressed levels. I mean, when all is said and done, what do you think?
I think we'll be happy, Carol, but like, this is going to add another 5-10% on to where we are today? No, I don't expect that.
Because what, the expectations already built in?
Already built in, and it's kind of wait and see. Some people are starting to take some profits here earlier on, the investors. But if we're happy with the earnings, I think we've got a good base going into the second half of this year.
Joe. Listen, let me ask you about the situation overseas. I mean, how much does that matter anymore? Has Europe pretty much quelled concerns about Greece, or are you worried that other pigs come to the trough now and it creates sort of a domino effect?
I hope the number is big enough, $60 billion now being talked about as a kind of a package for Greece, which will kind of push back on anyone going to Portugal or Spain. I think the lesson here is that Greece is condemned to slow growth for quite some time. Ireland, Spain, they're putting the policies in place to ward off the speculators. So I think the worst is over, but it's going to be a long haul for Mediterranean countries.
But doesn't it just kind of kick the can down the road? We've heard that a lot, in terms of Greece right now. I mean, maybe a little bit better rates here, but still, I mean, they're still having a tough time.
They're going to have a tough time. They're going to have a tough time, Carol, for the next couple of years.
Right.
When it comes to less pay, less services, and higher taxes. So the financial crisis is past, but the economic pain is yet to come.
And the crisis in Greece, if some have said that's over, at least for now, or what?
I think for now, and I think hopefully that the Germans and the French, the EU itself, can collectively stand behind Greece and kind of move ahead. That's what we're hoping for.
In talking about what's going on overseas and how it affects us, you think about the sovereigns, and then you also think about what's going on in China. Does it concern you, the inflation expectations, the worries that China will put on the brakes, even if it's through an appreciation, letting the yuan appreciate?
No, not at all, Matt. I think you can pencil in 8% growth for China this year, probably even better than that, and you're going to see the currency appreciate, and that's going to make for longer term being the optive word there, a better balanced Chinese economy and Asian economy in general.
Let me ask you what you expect for the year. I mean, as far as the economy, I'm sure you expect things to continue smooth sailing here because your S&P target is 1250 to 1300.
I think we're looking
no double dip, in other words.
No double dip, like 3.5% growth. I think the key, Matt, is what's the growth rate going to be in the fourth quarter? So I think we're good for this calendar year. You get into 2011, however, how much will China slow? They'll go by 8%. How much is the U.S. is the U.S. consumer going to be at the forefront? Are we going to continue to export? What about the dollar if it strengthens here? So I think near term we're in the sweet spot. But 2011, when we get closer to the end of the year, you get the year-end rally. But then I think some money that's been made will come off the sideline.
Joe, I want to go back to China a little bit because I know that's a big thing for you. I mean, we have to be very careful in terms of the pressure that we're putting on China in terms of its currency at this point.
Yeah, I think we do, Carol, because we're so much more dependent on China, whether it's trade, finance, foreign direct investment. We did designate China currency manipulator in 1994. Well, we didn't have a lot at stake there. We had the leverage, they didn't. So now fast forward to today, and it's a different story.
All right, forgive me. Let me ask you, Joe. So CSX, we know we continue to build on these earnings. What do you think of the numbers here and the transports overall?
Well, it's a railroad, so it tells you that in the better than expected
Right.
numbers, we're moving stuff. Companies are producing, consumers are consuming, so I think that's a very positive sign. It's the bedrock of the economy, the rail. So if they've got good numbers, I think that's a positive sign. Confirms that the economy is growing by 3.5%, 4%.
If that's the case, we want to see jobs added as well. I mean, if you see the economy growing 3.5%, you expect to add jobs, take unemployment down a little as well, don't you?
Yeah, we do. We expect, particularly amongst the skilled labor pool, that's going to, the unemployment rate's only 4.9% right now amongst skilled labor. That's going to drop. At the higher end unemployment, where you have a high school degree or less, I think the unemployment's going to stay in double digits. There's a skill mismatch there.
I hear that a lot, but I mean, Joe, it's going to take a while for both housing and the labor market to turn around. How much of that then translates into a somewhat of a drag on the market here?
It'll be
eventually?
a drag, Carol, but this is a $14 trillion economy that does lots of things.
Right.
We're going to make more capital machinery. We're going to exports. We're going to make cars. We're going
Enough to overcome those bad headlines in housing
Housing's a
and
big
jobs.
deal, right?
Enough to continue to grow. We're not going to grow at 4 or 5%, but I do think 3% is certainly doable. Certainly doable. And we've got more government stimulus coming down. 35% of the fiscal stimulus, the package last year in February,
Right.
is hitting. So, remember, this is a $14 trillion beast that does not beat to one tune.
And then there's 2011. We'll see what happens then.
Well, that's the
Got a
unknown
while,
right now.
though. All right, we got to run. Joe Quinlan, thank you so much. Ben.